Direct hit hook. AI is now making decisions about your loans, your investments, even your retirement funds, often faster than any human could. But here's a shocking fact. Less than 30% of countries currently have clear laws governing AI in financial services. So the big question is, who's watching the algorithms that are watching your money? In this video, we'll reveal how governments across the globe are preparing to regulate AI in finance, and why the next 5 years could redefine everything from banking to investing. Let's start with a simple example. Imagine applying for a mortgage. An AI algorithm checks your income, credit score, even your social media activity, and decides your fate in seconds. Convenient? Absolutely. But what if the AI is biased? What if it misreads your data? By the end of this video, you'll understand what governments in the US, EU, UK, and Asia are planning to regulate AI and finance, the key challenges regulators face, and how these decisions will impact investors, banks, and ordinary consumers like you. AI has revolutionized finance, from high-frequency trading to robo-advisors and AI fraud detection. But with great power comes great risk. The Bank for International Settlements, BIS, reports that AI-driven trading accounts for 60% of equity market activity worldwide. Yet, only a handful of countries have specific rules for AI bias, data privacy, and accountability in finance. 2010s, AI first used for algorithmic trading and fraud detection. 2020s, explosion of machine learning in credit scoring and robo-advisory platforms. 2024, EU AI Act became the world's first major framework categorizing AI in finance as high risk. Real-world example. In 2023, a major European bank faced backlash when an AI-based credit scoring system unintentionally discriminated against women entrepreneurs. This sparked urgent calls for government oversight. What different regions are doing? Globe showing Europe, Africa, European Union. The EU AI Act classifies financial AI as high risk, requiring explainability and regular audits. Heavy penalties, up to 35 million euros or 7% of global revenue, for non-compliance. United States, no single AI law yet. Instead, regulators like the SEC and Federal Reserve are issuing guidelines on transparency and model risk management. White House released an AI Bill of Rights in 2023 focusing on data privacy. United Kingdom. The UK is taking a pro-innovation regulatory approach, encouraging AI growth while planning sector-specific rules for finance. Singapore's Monetary Authority, MAS, leads with an AI ethics framework focusing on fairness and accountability. China, strong emphasis on data security and state control. The EU AI Act pilot programs have already forced banks to create AI explainability reports, showing customers exactly how algorithms decide credit scores. Key regulatory challenges. You might be wondering, why not just make strict laws and be done? Here's why it's not that simple. Complexity of AI models. Even developers sometimes can't fully explain how their deep learning models reach decisions. Global coordination. Finance is cross-border. Regulations in the EU may clash with US policies. Balancing innovation and risk. Too much regulation could slow down useful AI breakthroughs. Lightbulb stat. According to Deloitte, over 70% of financial institutions fear overregulation will stifle AI innovation. Yet 80% also fear AI-related legal risks. Pros and cons of government oversight. Balance scale. Pros. Protects consumers from biased algorithms, builds trust in financial institutions, encourages responsible AI development. Compliance costs could hit small FinTech startups hard. Slower innovation and product rollouts. Risk of creating regulatory arbitrage, where companies move to less regulated markets. Magnifying glass. Tilted left analogy. Think of it like traffic laws for self-driving cars. Too few rules and accidents rise. Too many rules and innovation stalls. Crystal ball predictions for 2025 to 2030. Most major economies will adopt mandatory AI audit systems for financial firms. AI explainability will become as standard as financial reporting. International agreements, like a global AI finance accord, could emerge to standardize rules. Rapid innovation could outpace regulation. Black swan events, a major AI failure triggering global market instability. Potential rise of shadow AI, where unregulated startups operate outside the law. Thought balloon, what if a rogue AI trading bot triggers a market crash before regulators can react? The ripple effect could mirror the 2008 financial crisis, but at AI speed. YTB checkmark, quick recap. Governments are racing to balance AI innovation with consumer protection. From the EU AI Act to US regulatory guidelines, the world is entering a new era of AI oversight in finance. Light bulb memorable takeaway. The future of finance won't just be shaped by algorithms, but by the laws that keep them in check. Thumbs up like this video to support more content on AI and finance. Bell subscribe to stay ahead of the biggest trends in financial technology. Speech balloon comment below. Do you think heavy regulation will help or hurt AI innovation in finance?